If I am to start forex trading all over again, there are certain things that I need to put in place before I start trading. If you are starting forex trading for the first time, this video is meant for you. So watch this video from the beginning to the end. If I'm starting forex trading for the first time, these are the things that I am going to do so as not to blow my account or go through financial pain. The first thing I will do if I am to start afresh is to acquire knowledge. I lost so much money when I first started trading forex, and the reason why I lost so much money was because I lack knowledge. I didn't have the knowledge of how to trade the forex market, and this was one of the reasons that made me to lose so much money in the forex market. For those of you who do not know, I've lost more than $50,000 in the forex market, and honestly speaking, when I lost this money, I felt so bad. I went through severe pain. I went through severe depression. The reason why I lost this money was because I didn't have the knowledge on how the forex market works. So if you are watching this video, my advice for you is to pay clear attention to every single word I'm going to drop in this video, because it's going to save you tons of money. If you are starting forex trading for the first time, the first thing you need to do is to gather knowledge. Gather enough information about forex trading. So I'm going to summarize what you need for you to become profitable in the forex market. So the first thing you need for you to become profitable in the forex market is one, a trading strategy. When I first started, I didn't have a trading strategy that works, right? I was changing strategy all the time. I did not have a specific trading strategy that works. So I was just beating around the bush. I was trading every strategy that comes my way, and once it is not profitable, I tend to shift it and pick a new strategy, not knowing that by changing strategy I am limiting myself from making money, because using one strategy can make me successful in the forex market once I know that strategy very well, once I have back tested it. But for the fact I didn't have information about this, I was just changing strategy, and that was how I was losing money back and forth. So the first thing, you need strategy. You need a well back tested strategy. That is the number one thing you need. So if you are starting out, my advice for you guys is to pick one strategy from all the strategies that I've shared with you in this channel. You can pick just one strategy, go to your demo account, backtest that strategy very well. So once you have backtested the strategy, then you can go and trade it on a demo account, right? You have backtested it and you have seen that the strategy is working. So why not go and test it on a demo account for at least 3 months and see how it works? Just avoid trading live account for the next 3 months. Focus on demo and follow your trading strategy. Just say to yourself, I'm going to use this strategy on a demo account for 3 months, and then at the end of the 3 months I will know whether if I am profitable in that 3 months or not. So once you have backtested and you have tried it on a demo account for 3 months and you have confirmed that the strategy is profitable, honestly speaking, you have gotten yourself a trading strategy. Then what you need to do is to apply what we call consistency. Consistency simply means repeating the same thing you did over and over again until you become successful. That is what consistency means. So that thing that you did using the demo account, replicate that in your real account consistently every day, and have it at the back of your mind that sometimes you're gonna be in lose or in losses, right? You need to have a realistic expectation. Do not expect that for the fact that you won today, you must win tomorrow. So if you lose tomorrow, it's part of the business. You accept and continue the next day, because sometimes you are going to lose and sometimes you are going to win, because the strategy is not 100%. There is no strategy that is 100%, right? So once you have gotten a strategy, fine, you have gotten one weapon to fight the forex market. So the next thing you need is to work on your money management. You have gotten a strategy. The next is your money management. So your money management has to do with how much are you willing to risk per trade. What loss size are you using? What is your stop loss? What is your take profit? What is your risk reward ratio? So these are the money management and risk management that you should know about. And like I said in every of my video, you are expected to risk not more than 1% of your trading strategy. If you have $10,000 account, you are expected to risk only $100 per trade. But if you have a $100,000 account, you are expected to risk only $1,000 per trade. But if you have a $1,000 account, then you are expected to risk only $10 per trade, right? So that it will take you 100 times for you to blow your account, which you know it is not possible. So you need to work on your risk management and your money management, right? So what is a stop loss? Where are you going to place your stop loss? So these are the questions you should ask yourself, right? Before you open a trade, you know where you are expected to place your stop loss. How many pips are you going to risk for your stop loss, and how many pips are you going to place for your take profit? That is where risk reward ratio comes in. So for you to know this, it is always advisable that you have a higher risk reward ratio, meaning you are risking lower money and you are aiming to gain higher money. So let's assume you have, let's say, a $1,000 account and you are expected to risk only 1% of that $1,000, and we all know that 1% of $1,000 is $10. So what you're going to do is you're going to go to a website, and then you will be able to know how you can calculate your position size. So if you are trading, let's assume you are trading gold, for instance, right, and you are expected to risk only 1% of your trading capital, and you have only $1,000 as your capital, then I will advise you not to risk anything more than 0.05. Your lot size should not be more than 0.05, right? You can also implicate that in every pair that you are trading, right? But as long as you are trading with a $1,000 account, make sure that you don't use lot size that is more than 0.05. And your stop loss should not exceed 30 pips. Your stop loss should not exceed 30 pips. What I mean is that your stop loss should be 30 pips below, right? It shouldn't exceed 30 pips. Why? Your take profit should be around 60 pips and above. So that is 1 to 2 rewards. That is 1 to 2 risk reward ratio. So you are risking 30 pips to gain 60 pips. That is 1 to 2 risk reward ratio, right? Or you can risk 30 pips to gain 90 pips. That is 1 to 3 risk reward ratio. So it means you are risking lower amount of money and you are aiming to win higher amount of money. So once you have identified the number of pips you are going to risk per trade for your stop loss and the number of pips you're going to hold on to for your take profit, then you also work on your psychology. Your psychology will help you to know when to place trade and when not to place trade. right? So it is always advisable that you exercise patience whenever you are trading the forex market. Why? Because patience plays an important role in forex trading. In forex trading, there is nothing like manpower, there is nothing like struggle. You are not a bricklayer. What you need is just skills and patience. The skills to know when a trade is ripe, when a trade is what? Ripe, right? So when a trade becomes ripe, you plug it, you place a trade immediately. So patience plays an important role in forex trading. So once you have identified your trading strategy and you have identify your risk management and your money management, you have gotten two weapons to attack the forex market. The next thing you need is patience. Like I said, you need patience. Why? Because you have to exercise patience for the price to come to your area of value before you place a trade. And when you place a trade, you also need to exercise patience for the trade to hit your take profit, because some traders make the mistake of holding onto their losses and taking their winning, right? Once that trade is in winning, they will start closing it, but when their trade is losing, they will be holding on to it, hoping that the trade will reverse. But if you want to be a professional trader, you need to cut your losses and hold your winning. So exercise patience and wait for your take profit to be triggered, right? Since you exercise patience and waited for your stop loss to be triggered, why not exercise patience and wait for your take profit to be triggered? So this is the things you need to consider if you truly want to become a professional, profitable forex trader. So once you have the strategy and you have the risk management and the money management in place, then you have patience. Like I said, the next thing you need to work on is your greed. You try to have a mindset of a trader, realistic expectation. Don't expect what is not going to happen. So what I'm trying to say is this: remove greed from your memory, right? Have a fixed target profit. If you are targeting 1 to 2 risk reward, fine. Not when the price is about getting to your take profit, you will now shift your take profit so that you make more money. No, be disciplined. You need to be strict. If your take profit is 60 pips, let it be 60 pips. If the market goes 500 pips, fine, but you have to stick to your rules, right? So the best way to succeed in the forex market is to be highly self-disciplined. The market might go 200 pips, don't worry, just focus on your rules, right? Because if you shift your take profit and keep shifting it, the market might reverse and start going against you, and before you know it, you might end up losing the profit that you have already accumulated. And there is what we call floating profit. Floating profit is a profit that you are seeing, but it's not yet yours yet. You are just seeing it on the chart. It's not yours, right? That is why when you place a trade and you are in profit, you start seeing your money will be going up. You see your profit going up. That is not yet your money until you close the trade. So that is why we call it floating profit. It's not yet your profit. It only becomes your profit when you have closed the trade, right? So you can watch and see your floating profit turn into losses. So why not be focused? If your take profit is 60 pips, let it be 60 pips. If your take profit is 90 pips, let it be 90 pips. So don't make the mistake of trying to shift your take profit, because the market might reverse against you. And you also need to be focused on your lot size. If you say you are going to use 0.05 lot size, focus on that. Since you have done the calculation and you discover that 0.05 in 30 pips amount to $10, and $10 is 1% of $1,000, why not focus on that, knowing fully well that If you lose, it's going to take you 100 times to lose your account. And like I said severally, many times, that in the forex market, you use money to make money. So why not manage your money like a pro so that you can last long in the forex market? So do not be greedy. Don't increase your lot size. No matter how desperate you are, do not increase your lot size. If your lot size is 0.05, let it be so. Right? Maintain consistency in your lot size. Right? Remove greed from your forex trading. Remove greed. So if you are able to do these things that I've stated, you will go far in the forex industry. These are the things that I did wrong when I first started, and it cost me so much money. And I wish I can reverse time. Right? I wish I can change the end of time so that I can go back to my past and correct that mistake. And those of you that are just starting now, this is one of the best information that you have gotten, right? Because nobody told me about this. I never heard it from anyone. So that is why I lost so much. I lost $50,000. So in Naira, that is equivalent to 50 something million Naira. It's so much money, right? I lost it in the forex market because no one told me about this that I'm sharing with you guys. So if you truly want to be serious with your forex trading career, and if you truly want to make it out of forex trading, you have to take this advice seriously. It's very, very important if you truly want to become successful in the forex market. So the word I want to leave with you guys is be persistent. Always stick to your rules. Always make sure that you place stop loss in all your trade, and never give up. Believe that one day you are going to smile. Your hard labor will pay one day, and you are going to sit down and look at yourself and say, finally I made it. So my advice for you guys is never give up, be self-disciplined, stick to your trading rule, stick to your strategy, and never ever give up. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I update new content. I will see you again in my next update. Bye.